Your HECM forecast for 2020. Happy New Year and welcome to a brave new decade, the 20s that is. As many of you may be preparing to implement your business and marketing plans for 2020, we thought it would be wise to take at least a few minutes to reflect on how previous HECM loans, the state of the economy, housing prices, and our political landscape may influence originators and lenders alike in the new year. It's been said that there are more people alive today than have died throughout all of history. It appears the exact opposite of that is true when it comes to the federally insured reverse mortgage. Consider this. Since 2016, the number of HECM loans terminating has exceeded new originations, that according to the GAO, or the Government Accountability Office. Now that crossover can be attributed to two factors: significantly fewer loans being sold since 2009, while loan terminations have spiked since 2014. By the way, those terminations are now steadily declining. That sharp increase in terminating loans could be very well why we saw some HECM properties remain unoccupied or vacant for several months and in some cases for several years. Now the economy. Despite several false alarms of an impending recession this last summer, the U.S. economy is actually doing well and posting some of its most impressive numbers. Consumer confidence remains high, wages are increasing, unemployment numbers are at historic lows while inflation remains in check. Also, the Federal Reserve's decision to reverse some of their earlier interest rate hikes in 2017 and 18, that bodes well for the HECM program. Not only will loan balances be growing slower, but future annual reports on the HECM's economic valuation, are heavily influenced by current and projected interest rates. While the vast majority of active HECM loans, as we know, are keyed to the LIBOR index, the federal funds rate has a significant influence on global indices. And speaking of housing prices are continuing to climb in most markets across the country. While that growth has been normalized, CoreLogic reports that national home prices increased 3.5% year over year in October 2019 and forecast a 5.4% increase by October 2020. As a result, originators will find fewer applicants disqualified due to home values in a soft market, and some may be able to net more money thanks to FHA's most recent and generous increase in the national lending limit for the HECM. Now to the ugly topic of politics. If you thought the 2016 elections were difficult to stomach, brace yourself for a bare-knuckled political brawl in 2020. Today, Democrats hold a 37-seat majority in the House of Representatives, while Republicans control 53 seats in the Senate. How the recent partial impeachment of President Donald Trump plays out ultimately in this year's midterms and also in the 2020 election, that remains to be seen. It's a significant shift in the House that could really have a significant impact and consequence for our industry. And here's why. Historically, it's been the Democrats that have been much more supportive and willing to see the reverse mortgage program continue despite its challenges, while the Republicans have a history of pushing for severe cutbacks or in some instances an outright elimination of the HECM altogether. So keep that in mind when it comes to the House. Regardless of your political leanings, most of you want to see Congress continue to support the means of homeowners to tap their housing wealth to fund retirement in their non-working years. With a divided Congress that's really engrossed today in political gamesmanship, HUD's proposals, such as the elimination of the national lending limit and also removing the HECM program from FHA's insurance fund, well, those may be taking a backseat to what is certain to be an epic election battle. Now, what are your thoughts? Leave your comments below. Also, you can share this video using the social media links found on this page. And don't forget, you can subscribe to our YouTube channel. You can just click on the subscribe button above, and you'll never miss an upcoming episode. In fact, you can receive a notification. Thanks again for watching, and have a great week.